Where does it come from? Do you just print it?
As a central bank, we have the ability to create money.
Hey everyone, how's it going? Today is October 8th, 2021, and we are going to cover a bunch of things that happen in the world of Bitcoin, in the world of the stock market, and finance in general. But first question I want to ask you guys, if you are in the chat, let me know how your week went. Did you invest in anything? Did you make any trades this week? Let me know how that went, and I'll check all your messages at the end because I'm very curious to hear after last week and engaging with everyone where everyone's at with this week. So this week, not a lot happened in the world of finance, in my opinion, but there were some new numbers that came out with the state of the economy in the US. There was this big kind of conundrum, I guess, with Facebook and the whistleblowing, and then also Facebook going down for 6 hours. I imagine most people here probably were a part of that. The most interesting story to me this week, I would say, though, however, is Bitcoin kind of decoupling from the stock market. And so we've seen this a little bit before, but not so pronounced as it was this week, where generally when we see Bitcoin move, it'll move in tandem with the stock market. If everyone's panicking, Bitcoin will go down as well, and if everything's all fine and dandy, Bitcoin will go up. But this week, we saw a little bit of panic in the stock market. We saw a lot of stocks and commodities trade in different fashions, and Bitcoin was up an astounding 35%. And we're going to dive into some of the reasons why I think that is. I think it has to do with the ETF and the kind of rumors of that incoming. And we're going to break down in a lot of detail, actually, what a Bitcoin ETF could look like, the impact that it has on the market, and what ones could possibly be approved first. So today we're going to start off with just kind of going over what happened with the S&P 500 and QQQ for the week, what kind of the main summarizations of the week were, and things that kind of drove the market to where it was. So overall, the market didn't really do much this week. We had some new lows, but we didn't get much follow through in them. So the S&P 500 and QQQ went a little bit lower than they did last week, but ultimately ended the week on a bit of a higher note. And the key story that came out this week was the jobs report. And we'll kind of go over some of the details on that first. But essentially, the Fed is pretty much in the clear to begin their tapering. And so they said that the terms that they would need to kind of begin tapering in the stock market would be kind of a growth in job numbers for employment, unemployment numbers to move lower, and for inflation to kind of be within their expectations. And so what we saw essentially is the September jobs report released on Friday showed the U.S. economy had the smallest gain in jobs of the year, adding a fewer than anticipated 194,000 jobs, while the unemployment rate dropped to 4.8% from 5.1%. Economists surveyed by the Wall Street Journal had expected a gain of 500,000 jobs. The unemployment rate was forecast to slip to 5.1%. In short, not as disappointing as suggested by the 194,000 headline number, while the rate of increase in employment has slowed relative to earlier in the summer, likely due in part to at least the fallout from the latest COVID wave, the pace is still likely sufficient for the Fed officials to follow through on plans to announce tapering at the November FOMC meeting. And so, as we've kind of covered in other shows before, tapering is essentially the Federal Reserve stopping their purchases of things like mortgage-backed securities and bonds. And a lot of people have kind of credited those purchases to propping up the market, where you have the Fed being kind of the buyer of last resorts for some of these bonds and some of the financial instruments like that. More investors have been comfortable to take money out of those sectors and put it into things like equities, as the returns are very minimal, of course, in something like the 10-year Treasury. Kind of going further over this is an important reality check in our road to recovery. We know that today there are 11 million open jobs and 8 million people looking for work. Employers across the country are getting increasingly creative when it comes to attracting and retaining skilled workers. It's no longer enough that employers are adjusting wages. They've got to address health and well-being, safety, and flexibility too. We are seeing a long-term change in the workforce. What people want from work and life has changed. As employers, we need to make the workplace attractive enough to bring people back in. And so my little tangent for this whole thing is just going off what was basically being said here. I think the way in which people work is drastically changing. I think this whole notion that people had of, going to school or getting a certification and going on a set career path and having, one job and that's your source of income, I think that's dematerializing in front of our eyes very quickly. I'm a huge proponent of Fiverr. My video agency uses Fiverr to hire almost everyone. We don't really hire people full time. We hire contractors to do one little thing here or one little thing there. There's a lot of specialty things needed in the creation of video production, for instance. Some of it might be rotoscoping or visual effects. And to have someone who has that entire skill set is really, really hard to find. And so places are increasingly finding themselves needing to have either a massive gamut of employees to kind of execute everything, whether it's like a social media plan or a content creation plan or business operations, or they can just go to individual freelancers who specialize in this stuff and get the gigs done on a one-off basis. And so I think the way that we think about jobs in this new economy in the digital age is a lot more around freelancing. And I don't quite understand, how they gather the statistics on unemployment and things like that. But from my perspective, if I was a freelancer and I was between work and someone asked me if I was employed, I probably would say no. If I had not had a gig, let's just say for a month, or maybe I just taken the month off, how would you respond to a census question asking whether or not you were employed? And so I don't think personally, and this is just my take on it, that when it comes to getting statistics on unemployment data, that they really have an accurate capture on how many people are freelancing or doing gig work or self-employed, and how that factors into where the economy is at. And because these numbers are so important for apparently how the Fed makes their decisions on whether they're going to taper or not, there has to be better data collection methods, I think, to figuring this out. And some of the data here on the gig economy is really interesting, kind of diving into this a little bit. The global gig economy is expected to grow from 204 billion, this is kind of old, in 2018 to basically doubling by 2023. Compound annual growth rate of about 17%. In the US, 44% of gig workers considered freelancing to be their primary source of income, with 60% of workers engaging in freelancing activities at least weekly. And I think one of the most important things, because you always want to be forward-looking on this, I don't know if I have the stat here. But essentially it was that, maybe I'll just try and find it here real quick. Nope, I don't know where I found the stat. I wrote it down, but I didn't get the source, my bad. The stat is essentially, though, that it's something like 38% of millennials are considered freelancers right now, and that number goes even higher for people who are Gen Z. So I think that's 24, 25 and under consider themselves freelancers, and they're doing gig work. And so some people might say, well, as you get older, that's when you settle into a career. So maybe it makes sense that younger demographics are doing gig work. But if you look really across the board, when it comes to every demographic doing gig work, the number is increasing as opposed to doing, full-time or part-time employment for an employer. As this grows, I really think it's going to be hard to kind of, tell who is employed and unemployed, because these things can really come and go per growth segment and per sectors of the economy. If you're in design, let's just say, I know the demand for that very much scales, and because a lot of freelancing work is not location dependent, it really makes figuring out employment more like a global situation rather than like this is how many people are employed in the US versus the world. So I guess that would be my question to anybody who's a freelancer out there. If someone came to you and said, we need your data on how you're employed, how would you go about it? And then I guess building off that, if you are self-employed, what is the structure of what you're doing? Do you consider yourself a business owner? Do you consider yourself an independent contractor? If you're doing your own business, and let's just say it's not, a mega corporation, you don't have employees, what do you consider yourself? Do you consider yourself a business owner? Do you consider yourself just a freelancer? I'm not trying to rat anyone out here for tax purposes, obviously, but I am curious to see where people land on that. I know for the longest time, I considered myself a freelancer, and I was kind of just taking, when I did my taxes at the end of the year, I was just taking invoice to invoice to invoice and just summarizing them all up and submitting them. But as a freelancer, you're also not paying an exceptional amount into Social Security. I imagine it's a little bit different in the States and where you live, but in Canada, we have the option of not paying into employment insurance if we're freelancers, and I never did. I took all that money and put it into Bitcoin instead. So that was my employment insurance. But yeah, curious what people think of that, and we'll go on to the next story. So the next thing is not a... The next story is something that keeps coming up, and that is, it seems every year Facebook gets into some sort of scandal. News comes out about data. Facebook is promoting this and that, and people get outraged and they're like, oh, I hate Facebook, and everyone, whines about Facebook by making a wall post on Facebook, but then they just go back to their own ways. And it's like Facebook is kind of this tentacle monster that no matter how much we want to resist it and pull away from it, we always get sucked back into it. And there's a few different reasons for that. We might not use Facebook, the platform, but we are probably using a subsidiary. A lot of people just use WhatsApp as just a messaging application, and Facebook owns that. And then Instagram is kind of a different social networking application. But I guess the headline that a lot of people are thinking about now, especially with this week, where we had both a whistleblower come out and leak a bunch of stuff publicly about how Facebook knew a lot of their data was, harmful to teenage girls and the like, but also how Facebook, the platform, went down for 6 hours, and a few people probably spent the majority of their day just refreshing and trying to figure out, when is this coming back. I heard some statistic that when Facebook goes down, they're losing something like $5 to $10 million an hour worth of revenue. That number might be wrong, but it seems about right for ad spend. And if you take all the net businesses that use Facebook and Instagram for marketing, when those platforms go down, that's revenue that they're not getting. So that's interesting to think about how big of a beast this platform really is. So what I wanted to kind of talk about when it came to this is, what is it going to take for people to leave Facebook, if ever? Because it just seems that they can put out one thing after another. They can get in one scandal after another. They can, do pay for play. They can exempt Mark Zuckerberg from being subpoenaed. A whole bunch of things that they've done to basically save face. And even with all those attempts, people still have a pretty negative view on Facebook. The left right now in the United States is really trying to clamp down on Facebook. The right doesn't really like them because of the censorship and what's been going on there. There's this bipartisan notion, which is pretty rare for the US and Canada and all sorts of places, that Facebook is a net toxic thing now to most people, that the benefits of having this social community are not are being outweighed by the net negatives of how people feel about themselves and the privacy concerns and the manipulation of data and how people are given news. And the question is like, how do we escape this if we are going to? And so I kind of wrote a couple thoughts that I had on this too. So one of the things that Facebook benefits from is a thing called a network effect. And a network effect is basically a phenomenon in which the value or utility of a user derives from a service depends on the number of users of the same sort of product. So if nobody was using Facebook, you wouldn't get much value out of it. If you only had 5 of your friends on Facebook, very early on in the first days, you probably wouldn't find that much utility out of it, because having everyone on there, the interconnectedness of the network is what makes it special. The corporations that are a part of it, the people that are a part of it, the people that are sharing content. And so networks, they grow, and they like to grow exponentially until they kind of consume everything. And that's, if you look at the growth curve of Facebook, it's kind of like an S shape where it's a ramp up, and then all of a sudden it kind of hits its stride, and then we start seeing, as every single person in the population has a Facebook account, the growth of new accounts starts to slow, and then from there, where do you go, right? So yeah, the general consensus on the network effect is that essentially the more people that use Facebook, the more valuable it is for everyone. Now, there are some downsides of network effect, and that is, being able to kind of, I guess from a user standpoint, filter out what you want to and don't want to see. So one of the companies that has had a problem with the network effect is LinkedIn, where essentially people will go on LinkedIn and they might have 1,000 different contacts to follow, and most of them they don't even know. And you might know someone, or you might have had Facebook at one point, and you might have had like 4,000 to 5,000 friends, and then one night you spent like, an hour or 2 hours cutting out all the people you haven't talked to for a year. So there are limits to how great a network effect is. If you're connected to people you don't know, the quality of each post on your feed generally goes down. The average quality of the stuff that you see goes down if you have too many things on there, right? So you need to kind of contain it yourself as a user to get the most value out of it. And the thing that Facebook has done really strategically, and it's hard to predict whether or not, Facebook would have failed if it didn't do these things, but it's that every major innovation in Facebook over the last 5 years has either been an acquisition of a beloved social network that essentially they consumed, and that could have been seen as a competitor, or straight up copying of the feature. So we all know that Facebook bought Instagram, they bought WhatsApp, and they control the method of communication now, not only in North America, but because of WhatsApp, pretty much all over the world. Right, and that was a really important acquisition for them a couple of years ago. And then on the other side of the token, we saw the rise of Snapchat and the growth of these, quick stories and things, and we've seen the rise of TikTok. And these features are just being, instead of Facebook buying these companies, and they did try to buy Snapchat at one point, they just straight up copy them. And, Snapchat as a company has actually still done well, despite, the story feature being blatantly copied by Instagram. But, Facebook couldn't come to an agreement on buying Snapchat. And so what did they do? They basically just copied the killer feature of Snapchat. And there's not much they could have done about that, which is interesting. So where I'm at this now is kind of thinking about, okay, we all know that Facebook is toxic in one way or another. We've read these reports of the Facebook whistleblower coming out. And I'll go over, some part of the testimony here. But this woman here, her name is Frances Haugen, testified in Congress on internal documents showing the harm from the company's products, from teenagers' mental health problems to poison political debate, adding fuel to the efforts to pass tougher regulations on big tech. Mrs. Haugen singled out Facebook founder Mark Zuckerberg for criticism, citing his control over the company. Mr. Zuckerberg controls about 58% of Facebook's voting shares, according to the April regulatory filing. There is no one currently holding Mark accountable but himself, she said. Facebook, under Mark Zuckerberg, makes decisions based on how they will affect measurement of user engagement rather than their potential downside for the public. Mark has built an organization that is very metrics driven. The metrics make the decision, and unfortunately that itself is a decision. So what I was kind of thinking on this is that I know a lot of newer parents today are trying to limit their children's access to social media, but it's a very hard thing to do. But one of the things that I think is coming with Gen Z and millennials, and as these generations start to have kids, is they will be the first generations that have been natively born into social media. So they have started using social media either from Facebook. I got my first Facebook account when I was, I think 13, 2008. So it was like 3 years after Facebook came out. But basically, it's hard to remember life before Facebook. And so we have a generation of people who will either barely remember life before Facebook or do not know life before Facebook and social media. And so it's possible that this generation will be more self-reflective on how it impacts their children because they grew up with it and they saw all the negative consequences to having, all these social media platforms. And so question I would pose is, could millennial or Gen Z parents kill Facebook or social media by saying we're not gonna accept this for our kids? We got suckered into this. We might delete our accounts, even though we know that deactivating accounts hasn't really hurt Facebook's bottom line. But a generation of parents could decide for their kids to really teach them about the dangers of Facebook, and that generation might not go down the path of accepting Facebook. Now, the only problem with this from moving out of this network is that older generations right now, let's just call out my dad maybe, use Facebook for discourse, but they likely don't understand harassment culture. So, I think as a parent, if you're part of an older generation, your kids are 30 or 40, you might not understand the effect that harassment or body image has because you don't have someone close in your family that's affected by that. But if you have a young kid, you definitely, know the impact of that stuff. The dilemma is, your kids still need to have a social life. They want to, connect with their friends, but wanting to insulate them from things like misinformation, bullying, etc., it's out in the public anyways. And so how do you really get around stopping your kids from spending all this time on social media without straight up saying you can't spend time with your friends or hang out with your friends? Because information is just so public and out there and anyone can really use it. And so people have apps on their phone to, block screen time and things like this. But ultimately what happens is, when we're all free, we end up making the decision whether or not we're going to be involved in social media. And so I pose this question: if anyone here is a young parent or planning to be, how would you approach social media for your kids? So would you limit the time? Would you try and block it altogether? How would we ensure maybe that a new generation of people growing up are not addicted to social media like maybe some of us in our generation are? And then my second point is that when it comes to networks, everybody wants something bigger and better. And that's why things like maybe MySpace didn't work out. That's why, Facebook has replaced a whole bunch of ways that we communicate because it was just a better way of doing it. It was, more data, more addicting, all these things. What if another company or an application comes out that does everything that Facebook does, but better? And so there's two angles on this, and one of them is that Facebook already allows for the importing of a lot of data onto another platform. So if a competitor did come around, and it's almost silly to say, oh, a Facebook competitor, but if a competitor did come around, very easily they could use the Facebook API to import a lot of the data. One of the reasons that we're so attached to Facebook is we don't want to deactivate and lose all of the stuff that we built up over the last 10 or 15 years on it, right? All these photos and memories and that archive of just things that kind of define our backgrounds and our histories, kind of like photo albums back in the day. And so the question would be, okay, well, if we can import some of this stuff, we might not be able to import message history. That's pretty important for a lot of people. But what if we could import everything else and still have that backlog without the Facebook interface, just have the hard files and data, and then interpret that into another social platform? What would it need from that point to still be better than Facebook? And so the question is, a lot of people talk about is, well, why don't we decentralize social media? What if we don't have a company making all the decisions about what we can and can't see? What if we make it sort of like a cryptocurrency where the users own the network and the users have a say in, how the network operates? If that was to become a thing, you would be faced with kind of two challenges. And one is that there's a whole lot of data circulating around the network. You have all of your photos and all of your data. Someone has to pay to host these things. There's got to be servers that host these things and allow us to interconnect. And so if Facebook was to be decentralized, essentially, there would probably be two options for it to function. That would be either you host your own data like a torrent file. And so if people want to see your photos and your profile, you're hosting them open from whatever device that you have. And that would mean that you'd probably have to be connected to the internet, or somebody else could host your data, similar to how Bitcoin works, where there's different nodes that host copies of the ledger. So essentially what we could have is we could have a social media platform that worked like a ledger where all of this data was public. The only problem with that is that the point of blockchains and ledgers are to have the data be unalterable. So if people are still going in and they're modifying descriptions and they're deleting things or they're adding things, then everyone's ledgers have to kind of update at the same time. And so having a peer-to-peer social network that has all the functionality of Facebook is very difficult. And then what that comes down to is, well, what if we paid intermediaries to be a part of it? And Facebook has dabbled with this as well, is what if we gave the users an option to say, okay, you don't want to sell your data, you don't want ads, you can pay a monthly fee to be a part of Facebook. And that idea has never really materialized either. So again, it's really hard to figure out what a world without Facebook looks like without a bigger and a better product coming around. But it's pretty clear what needs to happen in order for people to leave. And I think that's a better user experience, not having data, used against them. I think taking censorship out, preventing things as much as you can when it comes to bullying and body image issues and all sorts of things like that. But again, developing a network from scratch with all of those functions in it, very, very difficult to do. So I pass the question on to you. A couple theoretical questions that I thought of. At what price would you pay to use Facebook, WhatsApp, Instagram, and not receive ads or have your personal data captured? So if you wanted to be a part of it and you didn't want to have any more data tracking, you didn't want to have any more personalized ads and any of that, and Facebook was like, you can have that, but you got to pay a certain price for it, what is the maximum you would pay for that service? For me, and I know that it doesn't even equate to the value that they get per month from all your data, I'd be willing to pay maybe about $10 to $15 a month for that, to stay connected with my friends without having to worry about my personal data being removed. And that's if I really liked Facebook, because honestly, I probably, would rather just not have it, maybe do decentralized apps. But if it was an option, and I feel, the way I feel today about Facebook, I'd probably pay the $15 a month, similar to like a Netflix subscription maybe. I already do that for YouTube, which is great because you can just pay $10 a month and not have ads on YouTube. So it's a little similar. And then the other question I had is this: because Facebook went down for like 6 hours this week, and a lot of people thought like, oh my God, I have like everything on there and the website won't even load. And then there were rumors about, Chinese hackers and the domain was up for sale. And some people actually thought Facebook was done for good, which is kind of a joke. They have a lot of backups. If theoretically everything from Facebook was wiped, we're talking your messages, your chat history, your photos, everything, and none of that stuff could be retrieved again, but Facebook said, we're so sorry, we're going to try and start from scratch. And, I know we lost all your data and all that stuff, but we still have the infrastructure. We just have to build it all over again. what would it take for you to sign up on that platform? Because right now it feels like we're being held hostage by Facebook. But if they lost everything, they lost all of our personal data, all of this stuff, and there was just theoretically no way to retrieve any of that data, what would it take for you to go back on the platform? Would they have to pay you to do it? Would you just say, oh my God, the tentacles are gone, I'm never using it again, thank Lord? Or is there some situation where you would say, look, they messed up, they lost their data, maybe it was karma. I'll join Facebook again, but they've got to do X, Y, and Z. What are those steps for you? It's a kind of maybe a deeper question to think about, but think about it maybe as we go on to the next story. Lastly here, let's talk about Bitcoin and the great decoupling this week. So a chart speaks all the words you need to know here. And that is essentially that while the stock market was down, while bonds were down, while gold was down, Bitcoin was up 34%. In a market where everyone says, oh, you know, the Fed's tapering, risk is off, Bitcoin was up 34%. And guess what? Nothing that significant really happened. No new news broke that we didn't really know about. Brazil talked about, you know, legalizing cryptocurrency, making a legal framework for it, but I've seen enough in the space to know that that's probably not the reason that it went up. Some people say, oh, it's, you know, short squeeze, price supply dynamic, but the prices are holding really steady at these levels. They broke weekly resistances, and now Bitcoin is looking really strong once again. And so the thing that most people are trying to kind of, I guess, credit it to is this possibility of ETF approval on Bitcoin coming in either October or November. And so we're going to talk a little bit about how this might play out. Someone here, James Seifert, has posted some really good analytics on the likelihood of certain ETFs being approved and what it can mean for the market. So first of all, if you don't know what an ETF is, it's an exchange traded fund. So basically it's like a stock or an index or something that you can buy with your Questrade or your brokerage. And that, you know, if everything works correctly, it tracks the price of Bitcoin. And there is a small fee for doing this. They usually charge maybe 1% a year. So, you know, it'll be a little bit under the performance of Bitcoin, even if it tracks it pretty well, just because they're taking a fee off the top of it. But why is this really important? Well, number one, right now, for most people, you cannot buy Bitcoin and put it in a retirement account. And so retirement accounts, tax-free savings accounts, they allow you to buy and sell, buy and sell, buy and sell without accumulating taxes because all the money in there is locked until you're 65 or, you know, whether you decide to withdraw it. In Canada, we have the TFSA, there's 401ks, Roth IRAs, all sorts of things in the US. And so what a lot of people have done since there's no Bitcoin ETF is they've turned to stocks that track the price of Bitcoin. So that's why a company like MicroStrategy has such this, you know, big institutional demand. It's gone up 4 times. It's outperformed the price of Bitcoin because people have seen what Michael Saylor has done with that company, and they've said, look, he's buying Bitcoin. His company is basically a big Bitcoin holding company. If I want exposure and I can't just add Bitcoin to my balance sheet, or maybe I'm an institutional investor and I run a portfolio, I can't just throw a bunch of Bitcoin from Coinbase on there. I'm just going to buy MicroStrategy stock. And so having a Bitcoin ETF, all the people who don't want to go through those loopholes can now just buy the ETF. And there's a lot of money on the sidelines waiting to buy these ETFs. And the reason I can say that with confidence is that there was a Canadian ETF out called EBIT. So there's the Evolve Canadian Bitcoin ETF, and there is another one. There's 2 ETFs here. I can actually look up Bitcoin Treasuries. Let me just see here. So you can see there's a whole bunch of corporations that actually own Bitcoin. Sorry, I'm going to look up a different one here just so you can visualize this a little bit better. I think it's this one, bitcointreasuries.net. So you can see here, there's 2 companies. There's the 3IQ Bitcoin Fund, and that's a Canadian listed ETF. So this is something that usually just Canadians will buy. They have they have $1.2 billion of Bitcoin in this ETF. And again, this is just Canadian. That's 0.11% of all of the Bitcoin in circulation. There is also a Purpose Bitcoin ETF, which owns another $1 billion worth of Bitcoin. And then there's also a 3IQ CoinShares ETF, and I believe that's another Canadian one. So there's 3 ETFs that all have around $1 billion of Bitcoin just in Canada alone. Now, to give you some perspective, there's about 15 to 20 ETFs up for approval in the US right now. And so they're looking to get approval from the SEC to buy Bitcoin and to be these exchange traded funds. And they're all looking for approval. They've been doing it for 3+ years. But these are US based exchanges. people around the world do not buy Canadian stocks or Canadian ETFs, right? Because there's a lot of fees involved with that, and just portfolio managers are not going to hold that. But everywhere around the world, no matter what country you're in, people are buying American listed things approved by the SEC, listed on the NASDAQ or the NYSE. And so a Bitcoin ETF, not only has the appeal to every American, which is 10 times the population of Canada, so, easily, feasibly, the ETF should hold at least 10 times as much as the biggest Canadian fund, just based on the scaling of the capital markets and the population. But you also have all this other international demand that will want access to this ETF as well. And when we think about what that really means, that means that if an ETF gets approved, it could be either a futures-backed ETF or a spot ETF, likely futures. At the end, it's still going to hold an equivalent of likely upwards of $10 billion worth of Bitcoin at minimum. And there's a whole bunch down the pipeline that are going to want this. And so you got to think to yourself, all of this Bitcoin is either being bought up right now because someone knows that the ETF is coming, and maybe some of these funds are just buying it and they're going to say, oh, okay, well, we knew the SEC ETF was coming, so we just bought some ahead of time. Or a whole bunch of money is going to come into this space, and these companies are going to have to buy Bitcoin at no matter what price, because people are just going to say, I just want a share of the ETF. Let's just make sure that there's a Bitcoin to back it, or a chunk of a Bitcoin to back it. So again, really important, I think, for Bitcoin to make its next level up. I don't think it needs it 100%, but if we're going to see Bitcoin go above 65K this year, if we're going to avoid me eating an onion on camera, we got to see a Bitcoin ETF get approved. In my opinion, there's a likelihood that potentially Bitcoin could go above 65K without any ETF approval. But I think it's a lock done deal. And to really think about this in perspective as well, Bitcoin is really only about 18% away from all-time highs. So that's just like one piece of good news. And it doesn't even have to be a Bitcoin ETF, honestly. I think the price of Bitcoin went up like 20% the day that Tesla announced they added it to their balance sheet. So another thing too with the ETF is that it adds a lot of validation to Bitcoin, the asset class. And so people are not only going to buy Bitcoin because it's going into the ETF. It's not just going to be people who are front running the ETF. There's going to be corporations that just say, okay, this is now, pretty legal, pretty legitimate. The SEC is on top of it. They're allowing ETFs. Maybe now we can finally add it to our balance sheet. And so corporations will be adding this too as a way to hedge inflation, just like MicroStrategy and Tesla have done. The groundwork has been laid for this stuff. And so again, this is why I am so bullish on Bitcoin over just about anything else you can think of. There are so many different factors converging that make this probably one of the most bullish things that you can get into in the next few years. Lastly here, I want to go over this tweet thread by James Seifert. Let me just make my face a bit smaller so you can read this. But he essentially is placing some bets on whether or not a Bitcoin ETF is going to come in October. And so what is going to happen is that they have these deadlines. So when you apply for an ETF through the SEC, they have to get back to you within 45 days or 90 days and tell you whether or not they either approve it, reject it, or they need an extension to keep studying it. And they have a limit to how many extensions they can ask for. But people are starting to bet now when the ETFs are going to be approved, just based on some small little things that were kind of talked about by the SEC chairman and just historical precedents for when these things get approved. So James here puts the odds at around 75% for a Bitcoin futures ETF coming to the US in October. And so we have a variety of different strategy ETFs that are based on futures here. But essentially, he says, originally we had ProShares way out in front, but as David Neidig pointed out in a note and pointed out on the table below, Valkyrie is the only product that's been filed without reference to Canadian Bitcoin ETFs or other Bitcoin-related instruments for exposure. We have two thoughts here. The first, the SEC has already approved a mutual fund with the exact same Canadian BTC ETF language from the ProShares BTC FX. So if they approved this, why would they deny an ETF with the same language? The second is that Gary Gensler, who's the head of the SEC, was pretty damn explicit in his August 3rd comments that started this part of the Bitcoin ETF race about being limited to CME Bitcoin futures. But I honestly feel like we're trying to read the tea leaves like most people read the Fed minutes. So yes, Gary Gensler has come out and said, Bitcoin futures ETF would be more likely to approve than a normal ETF. As to why we are bullish on approval, there are a multitude of reasons. Number one, Gensler understands crypto. So Gary Gensler, the head of the SEC, actually taught a class on blockchain at MIT. But a key event was the SEC forcing Van Eck and ProShares to withdraw their Ethereum futures ETFs just 2 days after filing, but didn't require that for their Bitcoin ETF. So if they were going to reject these applications, they would have probably rejected them in tandem rather than letting the Bitcoin ones, keep materializing. Another key event was Gensler's September 29th comments when he reiterated support. I can't fathom the SEC deciding to include these comments voluntarily with plans to deny all those ETFs less than a month later. That's just psychopath level of cruelty if that happens. We're definitely in the minority on our call here, as evidenced by this Genesis trading poll, where 71% of respondents said the chances of a launch were 50-50 or less. So most people don't think that a Bitcoin ETF is going to be approved, this month. We've also been getting a lot of questions about the size of the CME Bitcoin futures market too. I tweeted about this yesterday. Bitcoin futures in open interest is rising, but not as much as many think. Currently sitting around 48,000 Bitcoin in open interest. Peak was 77,000 in August 2020, which is interesting if you think about it. Bitcoin price wasn't really doing a lot in August 2020. But something really interesting to note here too is that the futures premium is a lot higher on CME for the first time than it is on some of these Bitcoin native exchanges as well, which is showing that institutional demand is likely one of the bigger factors for why the price has gone up in the last week or two. So going back to the inclusion of Canadian ETFs, to me this makes sense. It's just another release valve different from moving out on the futures curve. It's logical, especially after the shitstorm created by USO in April 2020 when it hit position limits as oil went negative. So to include the Canadian ETFs is also potentially a good idea as well, instead of just doing futures backed, because some of these futures ETFs had some major problems in 2020. USO was one that tracked the price of oil, and it contains oil futures, and basically when they went negative, the entire ETF basically collapsed. Here's an exhaustive list of every US and Canadian crypto ETF filing. That's an absurdly long list that I can't even read because it's so tiny here. So what's after this, assuming a futures ETF is approved this month? Not sure, but it seems like the SEC may want more regulation on the underlying crypto market before approving a physical spot Bitcoin ETF, even though we think that the structure is a better product for investors. So a spot-based ETF, one that is actually based by the holdings of raw physical Bitcoin, probably a better bet than a futures ETF in terms of a better product that tracks most accurately the price of Bitcoin. All that being said, the SEC has pulled the rug on approval so many times, I can't help but wonder what's around the corner. We are basically Charlie Brown trying to kick the football. Also going to put it out there that we initially went on record calling for an October approval back on August 24th, so we're not just jumping on the bandwagon out of nowhere, though we've been wrong plenty of times. So that's kind of a good breakdown on the odds and what people are really analyzing when it comes to the Bitcoin ETF right now. And again, as I kind of talked about earlier, a rough estimate of a US spot Bitcoin ETF, Canada's ETF holds 21.7K BTC. Using the size of equity markets as a relative estimate, a US spot ETF would have to buy approximately 329,000 Bitcoin, and that's just one ETF. So, end of the day, my bias is pretty clear. I think BTC is going up, and I think an ETF is just a firestorm, because basically when that gets approved, I mean, you'd have to be a fool to sell any of it. It might be a sell the news event, but when a BTC ETF gets approved, they might actually own the Bitcoin. Depends on which one gets approved. The Grayscale Bitcoin Trust actually owns a lot of Bitcoin, and they're also applying to convert that trust into an ETF, but so far that hasn't materialized. If it's a BTC futures ETF, that Bitcoin has to be purchased from somewhere. And, to meet the demand of an ETF is going to require a lot of people to sell their Bitcoin. Right now, there's a lot of data out there. I don't have the charts, but a lot of miners, so Riot, Mara, Hut8, these are all companies I made a video on. They have been used to selling their Bitcoin to fund their operations, and they've decided as of the last few months, they're not selling any of it. They're going to go to the capital markets and just raise more money through, debentures or through dilution, and they'll use that to fund their operations while they just keep the Bitcoin. And so far, that strategy has played out. I mean, Bitcoin's up 35% in the last few days, so it's better at this point to borrow money at 3 to 8% annually and just keep the Bitcoin. And so you have the miners who don't want to sell their Bitcoin. You have the people who, if you have any brain cells, you wouldn't sell until this ETF goes live, I think. where's all this Bitcoin going to come from? It's going to come maybe from people selling it. Maybe, people are trying to short, so they're going to be selling some of the futures down. But I think the day that an ETF gets approved on Bitcoin, it's like a A1 buy signal, because it's not like the approval of an ETF will be the sell the news signal. It'll be the day that it goes live. So that's just my 2 cents. If you don't already have Bitcoin, I don't know what you're doing. I've been yapping about it for millennia at this point, but go get some damn Bitcoin. Don't bet the house on it. Don't borrow money to do it, but just start getting some, because I think we are still in one of the early innings. Maybe not the first inning, maybe not the second, maybe the second, but the ETF is one of the major catalysts that I think is still right around the corner. So yeah, that's it for today's show. Just me and my Bitcoin ramblings. But yeah, did you find anything else interesting this week? I'd love to hear from you guys. I'll check in on the comments and see how everyone is doing. All right. Thank you, Bennett, for tuning to the show. And yeah, Facebook as poison. I agree. I have a tough relationship with it because I know that I probably use it more than I should. I've really tried to cut Instagram out. Like, I rarely use Instagram. I'll just post what I'm doing in a day. I think it's just good to have that incentive to create things. But as a video creator, my conundrum with it is always like, I want to make something for, people to see what I'm doing, or use it as kind of like a filmmaking tool to capture my day. But I don't think I'm going to have to do that anymore anyways. I'm actually going to be opening a second YouTube channel soon because I'm going to be traveling a lot next year. And so hoping to vlog and do non-finance related stuff of just me traveling around, Peru. I want to go to Japan. I'm going down to El Salvador in like a month and a half to do a little Bitcoin documentary, but who knows? I'm going to capture all that stuff, and better to do that on YouTube than social media, I think. Well, YouTube's social media, but oh well. Yeah, Facebook is a little bit poison for sure. Yeah, I agree. YouTube, by the way, it depends how much YouTube you consume, but I did the math. Like, if you're watching an hour to 2 hours of YouTube per day, you're watching at least, 5 to 10 minutes worth of ads in there, maybe less. If you're skipping them, it's still like a lot of ads that you're exposed to. But let's just say for every 2 hours of YouTube that you're watching 5 minutes of ads. So I know a lot of people spend 2 hours a day watching YouTube. So 5 times 30, days. Maybe you're spending a little over 2 hours a month watching YouTube ads. I don't know. This is just anecdotal. Anyways, I came to that conclusion because I do watch around like 2 to 3 hours of YouTube a day, and I knew that I was watching like at least 5 minutes of ads a day as well. And so I was thinking, okay, $11 a month, and I get to save, 2 hours of my month. I think that's worth it. I don't like paying to get a paywall removed, essentially, and that's what it is. But if there is one thing I'm going to pay for, it is viewership on YouTube and not having to deal with ads anymore. So, yeah. So I had a bet on the show that if the Bitcoin price was not above 65K at some point before the end of the year, or under 30K by the end of the year, so in my opinion, it's either going to crash and plummet and burn and the cycle's over, or we are ripping past all-time highs. At least some point before December 31st, 2021, I will eat a raw onion on camera, and you'll see me cry because I don't think that's fun. Some people like onions. I saw a video the other day. Some person got pickled garlic and sriracha, and they like mixed it in a can, and they just ate the garlic cloves. And I don't know. Have you guys ever eaten like entire garlic cloves before? I don't know. I'm just only used to having garlic as like, garnishing or a cooking ingredient, but apparently you can just freaking eat them like that without wanting to cry or kill yourself. So who knows? Yeah. What else was in the news today? I mean, you know what I do is I always load up Market Watch here to see if there's anything, but just a lot of like the stuff that has kind of kept going. It's like, oh, stagflation. Oh, we got a big supply chain crisis on our hands coming in the next few weeks as the Christmas season heats up. But yeah, I don't know. I still think that Bitcoin's the most interesting story, so I'll push on that. But yeah, question for you guys. Would you prefer if I did a bit more rapid fire news and kind of try to cover more stories, or kind of went and kind of kept what I've been doing currently? And you can leave a comment in the comment section down below or the live chat, because I'm probably going to click out here in a bit, or in the Discord. And if you're not a part of the Discord, link down below for that. But I'm curious, do you want kind of this rapid fire news, maybe spend like a minute or 2 minutes tops on each story? Or do you want me to kind of just still select out 3 to 4 a week that I think are the most important and maybe a little bit different from, whatever's on Market Watch and just cover those? Let me know, because I'm always down to kind of see what gives you guys more value. I just find that, I don't want to reinvent the wheel here when it comes to I'm not going to just read off news stories. I want to always kind of put in my own take and postulate on some of the ideas that I have. But if you want to get more stuff condensed, I'm very open to doing that as well. So yeah, just let me know. But otherwise, thank you guys so much for tuning in, guys and gals. Yeah, I will not see you next week. I'm going to be in Vegas next week, eating a lot of great American food. I'm going to have a tomahawk steak. I'm looking forward to that. But I'll be back the next week, and I have some more stuff coming down the pipeline. I have some beginner content because I realize there is a good amount of people on this channel, surprisingly, that are not super into Bitcoin and just want general financial stuff. And so the world of purchasing your first Bitcoin, I did a video on that, but I'm going to do a little explainer on how to move it onto cold wallets and my ideas for that if you want to just keep it securely and you don't want to keep it on a website. And I'm also going to cover some stuff on the history of Bitcoin because we all talk about it like it's some inevitable thing that's going to take over the world, but in the very early days, it was so susceptible to failing and to crashing, and it's kind of amazing that it survived all that it has, from 2010 to 2014. It could have just collapsed. It's really every year it becomes more certain, but it was teetering back in those old days, and so we'll talk about that a little bit as well someday. But yeah, thanks so much for tuning in. Take care, and I'll see you in the next one.